How are you guys doing? This is Ryan, welcome back to the channel. Today I want to take a look at my $145,000 Robinhood portfolio and really jump into the income portion of it. So the dividends and also something I've been doing called the wheel strategy, which I've been doing covered calls and cash secured puts, which is an option strategy that has helped me make $321.47 in very passive income. If you look at my portfolio, most of the growth has come from capital appreciation. I've been able to make over $70,000 in capital appreciation in the last year. And a lot of this is in growth stocks and cryptocurrency, but I am also a dividend growth investor as well. It's a part of my strategy to help massively grow my wealth over time. And I want to talk about that today and why I'm so passionate about dividend growth investing, as well as I am with growth investing and cryptocurrency. I think it's very important to find ways to have income in a very passive way, and what stocks that I own that actually pay dividends, and what I look for in a dividend growth company. And I also really want to touch on options. I'm going to make separate videos all about options, but I just want to briefly go over what options I've been using and how I made some money from it, and the general idea of what a covered call or cash secured put is. So anyways, that's the topic for today's video. Let's jump into it. If you guys are interested in investing related topics, please make sure to subscribe to the channel, turn on the notification bell, and if you're enjoying the content, please make sure to give this video a thumbs up. Let's jump into it. Now for this $321.47 in passive income, $151.47 came from dividends, and the other $170 came from covered calls and cash secured puts. And I'm just gonna start at the beginning of the month and work my way to the end of the month. Now, the first stock that paid me this month is a little company called Visa. You've definitely heard of Visa. I own 8 shares with a total equity of $1,711.52. And they paid me a dividend of $2.56. So when I say I'm a dividend growth investor, I am not necessarily chasing high dividend yields. I want to find companies that grow their dividends over time. So Visa is a great example of that. Visa only pays out about 0.6% in dividends right now, but they've been raising their dividend by about 20% year over year, which is pretty incredible. So me, as someone that's 31, I want to get into a stock like this where I will exponentially be able to grow my yield on cost over time. And how do I know that this is safe or likely to occur? When you look at a dividend growth stock, you really want to look at their payout ratio. So what percent of their profits do they actually pay out in dividends to their shareholders? So if you look at Visa, they're only paying out about 20 to 23% of profits to shareholders. So what does that mean? They're likely to continue increasing that because they have lots of leftover profits. And they also have lots of leftover profits to help grow the company and grow the share value. So you'll have a lot of capital appreciation, as well as you'll have your dividends growing every year. And you'll be doing nothing for that. And that's an amazing thing about dividend growth investing, is you will get raises higher than inflation for doing nothing. And to me, that is pretty amazing. So someone might laugh and say, oh, you've only got $2.56. Well, I'm gonna buy a lot more Visa over time, and they're gonna raise it over time. So investing is not always a sprint, it's a marathon. And when you get that notification every year that your company has increased its dividend, it feels good. It's like getting a raise at work, in my opinion. Let's jump into the next dividend. The next stock that paid me is a company called Intel, another large tech company. And I own 28 shares of Intel of a total market value of $1,317.40. And they paid me a dividend of $9.24. They have roughly a 2.5% dividend, which is still pretty modest and pretty low. But I also really got into Intel as a capital appreciation play. Intel is a humongous semiconductor company with a total market cap of roughly $200 billion. And this year they've really struggled with companies like Nvidia and AMD capturing lots of market share, and the market is pricing really in Intel to go out of business. Intel is a large tech company with a price to earnings ratio of 9. I think that's very cheap, and I don't think Intel is gonna go away. They're a huge company. So let's take a deeper look at this Intel dividend, because for me, it's like a cherry on top. I think the stock is likely to appreciate, and I'm gonna get paid some cash while I wait. So as we take a deeper look, Intel has a payout ratio for the dividends of roughly 26.97%, which is very modest. Some companies you'll see have payout ratios of 80, 90, 100%. You'll see companies that are borrowing money to pay shareholders, which for me is a red flag. Intel does not have the same growth rate of their dividend as a company like Visa, but at 6.6%, it is still better than inflation. One thing very important to understand, that dividends and dividend increases are definitely not guaranteed. So you want to look at companies' track records of their ability to raise their dividends. So a company like Intel has been able to raise their dividend for over 9 years consecutively now. So that's another good indicator to look at the stock. One, do they pay a dividend? Is the dividend safe? And have they proven over time that they can increase this? Because this may be something that can really subsidize your retirement as you're getting increases and not getting eaten away by inflation. Cost of living goes up, and especially as you're older, medical care goes up higher than the rate of inflation of 2-3%. It actually goes up over 5%. So it's very important that you don't get eaten away by inflation so you can really enjoy your later years in life. Speaking of dividend cuts, the next company I got a dividend paid from was Wells Fargo. And in a year of a pandemic and a lot of financial uncertainty, Wells Fargo cut their dividend by 80%. Not a very good thing. I'm still hanging out in the stock. They paid me $4.40. It really hurt to take this kind of pay cut, and I'm still gonna hold my Wells Fargo for now. I'm gonna wait and see how the company does. You are seeing a lot of these banking stocks finally start to come back in capital appreciation. They really struggled, as banking is not a high growth industry, especially huge companies like Wells Fargo. So I'm keeping an eye on them now. I hope that dividend does come back. I think it's likely to come back as people get back to paying their mortgages, and all these programs where people can forbear their mortgages kind of dry up. I think that they'll be back on track. All right, the next payment I received was actually an option. I placed what's called a cash secured put on a company called Hylion. And essentially, for a cash secured put, you have to say, I'm willing to buy 100 shares of a stock. So I said I'm willing to buy 100 shares of Hylion at $17.50. Now, just by guaranteeing that, I collected a premium on the contract of $30. Now in this scenario, actually I did get assigned the shares. I had to buy 100 shares of Hylion at $17.50. But as you'll see later on, and I'll briefly talk about it now, I turned around and started doing covered calls. So for example, I turned around and on December 14th, did a covered call, and I said I will sell my Hylion at $21, and if it goes there, I will have no problem doing that, but I will collect that premium of $20 by guaranteeing to do this. So I am a seller of puts and a seller of calls. People who really want to leverage a lot of money to make more gains, they will buy these. And as things are more attractive and stocks have more volatility, you'll see what's called a premium start to go up. By guaranteeing you're gonna do something, you are able to collect this premium on the marketplace. But let me know if you have more questions about that in the comment section below. Again, I'm probably gonna make future videos about this. And this was really my first month getting my feet wet with it and really just getting comfortable with doing cash secured puts and covered calls. But let's jump into the next dividend. The next dividend I received was probably from one of my favorite companies, and that is Johnson & Johnson. Johnson & Johnson is a healthcare conglomerate, and I own 30 shares with a total market value of $4,599.90, and they paid me a total of $30.30. Now, to me, Johnson & Johnson is probably the best company you could possibly own. They're so well diverse in terms of products that they offer and services, and also they are dividend royalty. They've been raising their dividend for over 60 years for investors, which is incredible. And their dividend payout ratio is somewhere in the mid 50 percentile, which is rock solid. This is a company I tend to own a lot more of in the future, and I always like parking cash there, because it is better than any bank account that you'll find. And it's not gonna be a high flying stock like Tesla, but it's gonna do its job every year there for you, as it's proved for the last century. The company's been around. The next stock that paid me is a little company called Microsoft, which I said how amazing Johnson & Johnson was. Also, Microsoft is an amazing company. They're the only two companies in the world that have AAA credit ratings. Not even the United States federal government has this high of a credit rating. But Microsoft, I own 25 shares with a total market value of $5,627.25. They paid me a total dividend of $14. Again, these stocks don't have very high yields. Johnson & Johnson was roughly 2.6%, and Microsoft is 0.94%. My yield on cost is a little bit better because I own my shares for $191.62. So what happens is when a stock goes down, the company pays out their dividend in terms of how many shares you own. So they pay out $1 per share or $2 per share. So when the stock goes up, the dividend gets smaller because they're only paying out a certain amount of dollars per share. So that's why you want to make sure that dividend grows as well. So you know, I'm buying at this price, it's going to go up. And Microsoft keeps on increasing their dividend every year by 10%. And again, they also have a very low payout ratio. So it's safe and you know it's going to grow. All right, the next company that paid me is a company called Applied Materials. They're another technology company that really specializes in the hardware materials that goes into a variety of tech equipment. This stock, I've had great capital appreciation as I'm up 47% on my investment. And the cherry on top is that dividend. So they paid me a total of $4.18. And again, you'll see the trend for me is I don't really chase yield. My friend Gen X, who's got a great dividend channel, says, Chase women, not yield. I think it's really sound advice for anyone. And just so you know, a website I like to use to kind of track this information as far as dividends, payout ratio and things like that, I really enjoy the website called Seeking Alpha. Let me know what websites you like to use to find out dividend information, and really just to screen a stock to find the important metrics. So again, look at the dividend payout ratio. Applied Materials is only paying out roughly 18% of their profits in dividends. And the 3-year dividend growth rate is 27%. That's insane. So you'll see the theme again. I got a lot of time on my hands. I'm not worrying about dividends paying my bills today. I'd rather have a bigger pile in the future. The next payment I received was that covered call I did in Hylion for $20. We kind of already covered that. And then we'll jump into the next dividend stock, which is another form of dividend royalty, and that is 3M. I read something that you are always within 10 feet of a 3M product. Like, that's how diverse they are. They have 80,000 products in any kind of adhesives or things for your home, for vehicles, for business, chemicals. They're so diverse. And they're another company that has been raising their dividend for over 50 years. And I own 19 shares with a total market value of $3,319.49, 14% capital appreciation, and that cherry on top is roughly a 3.3% dividend that has been raising for many, many years. And the dividend they paid me was $26.46. All right, the next dividend I received, I'm gonna kind of put into a basket of things. I am speculating into oil tankers. Right now, oil tankers are those ships that carry and transport around oil. There are ships that are built specifically for that. And in my opinion, they are very cheap from a price to book value and a price to earnings ratio. The market has a lot of these stocks extremely cheap. So I own a basket of these, as I think eventually the market will price them at a higher valuation. So I think these stocks in the next couple of years could appreciate quite a bit. And while I'm hanging out, I'm just gonna collect these dividends. So a company called Scorpio Tankers paid me $5.80. A company called Nordic American Tankers paid me $4.80. International Seaways paid me $1.56. And I think I covered the tankers that paid me for this month. So these are not long-term holdings for me in terms of, like, I don't think I'll give these stocks to my kids. Stocks like Johnson & Johnson and 3M, I think I will give these to my kids one day. I think I'll hold them forever. These stocks, I am in kind of a few-year trade here. I think if you look at the charts for tankers, they have these times when they go parabolic. So I'm taking a small part of my portfolio and speculating that the fundamentals will continue to improve for these companies and the market will not price them as cheaply. And a big reason for my speculation really is the price to book value. Like, it makes no sense to go out there and buy ships to compete in the market, because the companies that actually own the ships are actually trading at lower market caps than the value of their ships. So like, the value of their assets is cheaper than the value of the company. So there's not gonna be a lot of competition running out there. So eventually, when the market needs more ships out there, it's not gonna be incentivized enough to do it, and these companies' evaluations will rise. I don't know if it's gonna happen in 6 months, a year, 2 years, 3 years, but I think this is a favorable position to be in. All right, the next company that paid me is actually a REIT, a real estate investment trust, and probably the best one on the planet, and that is ticker symbol O, Realty Income, not Reality Income, Realty Income. They are a monthly payer, meaning they pay dividends every single month, and I own 58 shares at a total market value of $3,580.34, and they paid me a dividend of $12.64. The difference in their dividend is they're not what's considered a qualified dividend, so I actually have to pay normal income tax on this. One thing I didn't talk about is that dividends are taxed as more long-term capital gains. So another amazing thing about owning dividend stocks. Realty Income has been raising their dividend for over 25 years, making them a dividend aristocrat. And they showed during the pandemic they were still able to collect over 85% of their rents the entire time. They have really great tenants like 7-Eleven, like LA Fitness, Walgreens, Dollar General, FedEx. I'm checking out more. Walmart, Sam's Club, BJ's, CVS, Kroger, Home Depot, a lot of blue chip companies in there. And this is why they've been able to pay dividends to shareholders for so many consecutive years. And they're one stock, when I don't know what to buy, I just always kind of buy them. All right, the next payment I received was a cash secured put that I did on another ship company, Carnival Cruise Lines. So I said I would buy 100 shares of Carnival Cruise Lines at $21. I did not end up having to do this, but I got paid $44 by saying I was gonna do this and putting up the cash. Now, I should note that all my covered calls and cash secured puts were all in very short timelines. I think even just like a week. So I had to lever that money for a week, saying I would do something with it and go from there. The next company that paid me is an energy company called Duke Energy. I own 15 shares for a market value of $1,353.75. I have an 11% return on the stock already, and they pay me a dividend of $14.48. Now they have a higher starting yield at 4.26%, it says right here. But a lot of people in this video probably already know who Duke Energy is. You probably pay your utility bill to them as they're a utility company. And there is risk in every investment, but we all know that people are gonna pay to have their lights on. In a pandemic, not in a pandemic. So when the stock fell during the pandemic, I had to become a shareholder because to me, they're one of the better utilities to own. So that's when I invested and locked in those sweet dividends. All right, the next company that paid me is a company called Chemours. They're a chemical company. I got in this stock for a capital appreciation play, and so far it worked out pretty well. I've bought 40 shares of Chemours, and I currently have a market value of $1,037.60. Total capital appreciation of 52%. And also, while I'm waiting for the stock to continue to rise and go back to normal levels, the stock sold off hard around when 3M did over a year ago because there were some chemicals, they had some lawsuits due with it, they had some liabilities from another company they used to be a part of, they spun off from, called DuPont, and they paid me $10. So I love situations like this where I'm getting capital appreciation and getting paid dividends to wait. It's a win-win scenario. All right, the next company that paid me is a company called Waste Management. We all know them, and to me they're really turning into like a high quality dividend stock as they continue to raise their dividends at aggressive rates. I think they just had a 7 or 8% raise. I own 14 shares of them with a market value of $1,653.26, and they paid me $7.63. So again, they're another company, low starting dividend yield of under 2% right now, but they raise it every single year and pretty aggressively. And a company rock solid like Waste Management that has such a strong business model, this is a stock I plan on holding for many years and watching the position grow and the dividends grow. All right, the next payment I received was another covered call on Hylion because I got assigned those shares, and I'm gonna do covered calls every week until those 100 shares I got assigned get called away. So I said I would sell 100 of my Hylion shares at $19, and I collected a $30 premium. So important to know with this kind of investing, covered calls, cash secured puts, you have to get into a stock that you really don't mind ending up owning because you could get stuck into it for a while. And this option ended up not getting called away. It ended up expiring worthless. And on that same day, I was on vacation. This takes me 5-10 minutes to do on my phone. I did what's called a cash secured put on a company called Palantir. I would love to own more Palantir. I do own Palantir stock. And I said I'd buy the stock around $24. And they paid me a $46 premium for saying I would buy more Palantir stock. Something to think about. Think about this in terms of how you handle your cash and how you get into an investment. It could be an added tool for the tool chest. You know, these are all different things that we have to learn to grow our wealth. And the last payment I received in the month of December is a company called LTC Properties, which is another REIT that specializes in elder care and nursing homes. They pay me every single month, and I have 18 shares with a total market value of $709.38. I'm currently down on the position, roughly 10%. But while I'm down, I'm collecting that dividend, which right now is $3.42. They're not raising their dividend consistently. And as my portfolio has a lot of holdings, I want to make sure I have access to things I want. I think I do want to be in elderly care. I like this sector. I want to make sure that LTC Properties is the best horse to ride, but that's something I will continue to evaluate. So if you guys enjoyed the video, please make sure you subscribe, make sure you give it a thumbs up, and also hit that notification bell so YouTube notifies you every time I upload a video. If you guys want to follow me closer and have more kind of direct conversations, you can follow me on Instagram. I'll put my handle here. I DM different people that have found me from YouTube. We talk stocks. And in my stories, I post a lot of things that I'm doing in the market, something I like, something I don't like. And I just post there pretty much daily. So if you want to be a part of it over there, make sure to visit me. It's been a kind of a longer video. As the portfolio just gets bigger and summarizing it gets a little bit longer, but I hope you found value in it. And if you have any questions, just let me know down in the comment section as I respond to every single comment. But until next time, guys, have a good week and a Happy New Year. Happy New Year.